we greet our attendees or the attendees to today's all-important seminar. We pray that, inshallah, this seminar will be beneficial to us in our future endeavors. And certainly, it's a seminar that is out to address an important topic, that's leveraging non-interest finance value propositions for customer experience through product offerings. And we'll be listening to two illustrious resource persons who are going to be treating this all-important topic. As you might all agree with me, in today's times or in the modern times, competitive marketing, especially in the financial industry, is something that every financial institution must prepare for and carve a niche for themselves. To this end, this NIFIAN webinar will be exploring how to maximize customer experience through non-interest financial products, services, and offerings to provide valuable. This particular seminar will also be providing valuable insights to deliver and enhance value to our stakeholders. No doubt, this seminar is going to be relevant and useful for financial institutions, policymakers and regulators, and individuals, corporates, foundations, and the not-for-profit entities. On this backdrop, NIFIAN, by way of introduction, NIFIAN is an umbrella body, meaning NIFIAN, the acronym means Non-Interest Financial Institutions Association of Nigeria. It's an umbrella body for all Islamic financial service providers in Nigeria. We talk about the bank, the Islamic banks, the takaful firms, the capital market players, that's fund managers, among others, including the cooperative and all financial service providers. And to do justice to this particular topic are two illustrious individuals, as I've mentioned earlier. The first of them is Malam Ahmad Kollere, currently head licensing and regulation at NICOM, that is a Nigerian Insurance Commission, and National Insurance Commission, sorry, pardon. And secondly, we have also our own Moshood Babatunde, the Executive Director, Lotus Capital Limited. I wish to hand over the platform to the host of today's session, that's Dr. Basheer Oshodi, who is the Vice President of the Non-Interest Financial Institutions Association of Nigeria, NIFIAN, and also the CEO of Trust Atom. Over to you, sir.
Okay, thank you very much. Thank you. I'm going to keep it rather short, so I don't give another lecture altogether. I think you've said everything. So I'm speaking on behalf of the President, Ms. Adela, who is not here today. She sent her apologies. Now, again, you know, for the industry, the reason why we have NIFIAN started as the Islamic Finance Working Group way back 2009. And when we set up then, it was being sponsored by FINA, Enhancing Financial Innovation and Access. And of course, I mean, FINA is being sponsored by DFID and the Gates Foundation at that time. Now, in the beginning, we wanted to consciously push the growth of Islamic finance in the country and the purpose towards financial inclusion on the one hand, on the other hand, to ensure that certain, you know, if you like, segment of the market that don't like to use conventional banking, you know, can then be, you know, onboarded, if you like. At that point, we had the regulators there, the observers. For example, Madam Kollere has been there since 2009, I must confess. You know, of course, the Central Bank was there as an observer member and all the other regulators. There was a time we had to look at some of the challenges in the market, right? Which is basically around liquidity management, you know, instruments. That challenge is still there till now. We developed, the Modaraba and the Wakala contracts approved by the central bank, so that it's going to be very easy to have trading amongst members, aside many other things, right? More recently, we've come to discover that even the market is yet to truly and sincerely understand the way the product work, right? There's still lots of challenges. As a percentage of the conventional market, we're still struggling with 1%, 1.1% thereabout in terms of asset size. And if you look at the debt market, we're still struggling with about 2%. So in the last 10 years, there has been growth, but we think that we can have a lot of engagement and advocacy to ensure that this is even much better. So for today, what we're going to be looking at is, again, this is going to be our second lecture this year, right? We're going to be having 4 minimum every year and all of that. So the purpose of today's lecture is basically to see the value proposition we have, right? It means something under conventional finance. It's completely different. Under Islamic finance, what we call non-interest finance in Nigeria, what kind of product are we going to be offering? What are we going to do differently? And the purpose of this is not just to have a nice lecture and go back home. The purpose really is to learn, and then let's see what we can change. What kind of changes do we need, that will help the industry grow further. I'm not going to take a lot of time. I'm just going to, at this point, pass it back to my brother, Brother Tesleem, to introduce the lecturers or to call the lecturer in, and then we can get started. So again, on behalf of NIFIAN, the president of NIFIAN, the ESCO members and other members of NIFIAN, I'm saying welcome to everyone. Thank you.
Thank you very much, Jazakumullah Khair. And to proceed, the first of the sessions, we speak to leveraging non-interest finance value propositions for customer experience through product offerings, the Takaful perspective. And to do that for us is Malam Ahmad Kollere. And by way of a brief presentation of his profile, currently, Malam Ahmad Kollere is currently an assistant director, that is the head licensing and regulation for insurance intermediaries. That's the Nigeria Insurance Commission, NICOM Abuja, since 2023. Is an individual who has the sociology background from the University of Maiduguri, and from there he proceeded to bag his master's in public administration, his PGD in Islamic banking and insurance from Institute of Islamic Banking and Insurance, London. And then over time, he has been the pioneer head of the Takaful unit at NICOM. He was also one time the head market development at NICOM, and he was also one time the head of financial inclusion at NICOM. Just as mentioned by the VP of NIFIAN, Malam Ahmad Kollere has always been on ground. He has been part of the Nigeria Islamic Finance Working Group, which is the forerunner to NIFIAN, the current umbrella body under whose tutelage we are holding this webinar. He has also participated in the CBN member of the Islamic Financial Services Board, the Takaful Standard Working Group, that is IFSB, working on IFSB Standard 18. He has also been a member of the IFSB Task Force for Prudential and Structural Islamic Finance Indicator. When we look at the associations with which he has been members, it includes the Chartered Institute for Personnel Management. Is an associate fellow of this. Is also an associate fellow of the Nigeria Institute of Islamic Banking and Insurance. Is equally an associate member of Toronto Center for Global Leadership in Financial Supervision. So we can go on and on and on to look at the wonderful profile of the first resource person. To cut it short and to give more time to the session to you, Malam Ahmad Kollere, to take up the first of the sessions, basically leveraging non-interest finance value proposition for customer experience through product offerings, the Takaful perspective. Bismillah.
Thank you very much. Assalamu alaikum, Mr. Chairman, Brother Oshodi and Tesleem, my brother Moshood Babatunde, and all the other people who are linked to this webinar. Thank you very much. I really appreciate NIFIAN for finding me worthy to speak on this platform. And like Oshodi has said, you know, Alhamdulillah, thank Allah subhanahu wa ta'ala that I've been part of NIFIAN even from the beginning, because from the Nigeria Islamic Finance Working Group, which metamorphosed into non-interest finance working group, and also finally metamorphosed into the NIFIAN. I'm very, very happy to be associated with this association. Thank you very much. Briefly, I have a presentation on the Takaful perspective. I don't know if I'm allowed to share my screen. Thank you very much, just to be sure. Then Takaful as an aspect of Islamic finance, then the difference between Takaful and conventional insurance, the Takaful products, the market experience, the Takaful consumer protection, the future prospect, and then we conclude. It is a very brief presentation. And by way of introduction, you know, Islamic finance is a type of finance that is based on the principles of Sharia. And of course, the salient tenets of Islamic finance is avoidance of interest, excessive uncertainty, speculation, gambling, and activities that are termed as you know, mostly prohibited in Islam. Of course, contemporary Islamic finance is established to avoid non-permissible financial dealings, establish a system of wealth redistribution, economic justice based on Sharia principle, and to achieve financial inclusion. So briefly, the contemporary finance get into the following to speak, because Islamic banking and finance, as you can see, capital market, Islamic insurance, takaful or ta'awuni, this is the area that I'm going to briefly speak. Then Islamic social finance, which is, I'm happy Tesleem has introduced this in the beginning. So what is takaful? You know, before takaful, there was ta'awuni, and takaful came as a result of the 1984 Takaful Act in Malaysia. But before the 1984 Takaful Act in Malaysia, there was ta'awuni, which dates back to 1979 in Sudan. But Alhamdulillah, Malaysia was the first country to come out with an act of parliament to recognize takaful. And takaful is a hybrid of ta'awuni and also commercial operation. So that is why today we have the concept of takaful. It is an integral component of Islamic finance. It is an insurance concept based on the principle of mutual assistance and shared responsibility. So you can see the mutuality coming out clearly. It adheres to the ethical and legal rules derived from Sharia. Of course, the word takaful has its roots from the Arabic word kafala, which donates to guaranteeing each other or joint responsibility. So the concept of takaful, as explained here, is participants agreeing to a joint guarantee and mutual help in the event of loss or damage by a defined risk guided by a defined principle. You know, since insurance provides cover for you know, certain types of risk, takaful as an alternative or a substitute to conventional insurance also, you know, covers defined risk guided by a defined principle, which the principle, of course, is a Sharia principle. And this arrangement, as we have today in Nigeria, is also licensed and regulated by National Insurance Commission, which is NICOM. Then briefly, what are the major differences between conventional insurance and takaful? You know, to start with, the organizational principle of a conventional insurance is profit for shareholders. That is why talking about profitability, that is not to say that insurance is not, you know, providing, you know, cover for the specified risk, but the organizational principle behind conventional insurance is profit for shareholders, whereas for takaful is mutual for participants. That is why it is different. And the basis for conventional insurance is risk buying and risk transfer. The insurance consumer in conventional insurance is transferring his risk to the conventional insurer. Whereas in Takaful, it is a cooperative risk sharing because the operator is managing the pool of risk of participants, and the participants includes, you know, the people who are at risk, or who are, you know, trying to make sure that their risk is insured. So that is also a basic difference between conventional insurance and Takaful. Then the value proposition, like I have mentioned earlier, is, of course, for conventional insurance, profit maximization, profitability for shareholders. That's it. Nothing more, of course, apart from the cover. But for Takaful is a joint guarantee, ethical, spiritual satisfaction. Then profitability comes later. Why I say profitability comes later, of course, the operators, you know, have to have, they have to get profit at the end. But the maqasid behind Takaful, the Sharia objective is to, you know, to provide satisfaction, spiritual satisfaction, and joint guarantee for the pool of the participants. Then the laws governing conventional insurance is secular and regulations, while for the Takaful, of course, is Sharia and also regulation. As we can see, you know, governance, prudential regulations also are part of Takaful, but the principle, underlying principle for Takaful is Sharia. Then the ownership of the fund for conventional insurance, the shareholders own the fund. When you pay premium in the conventional insurance, you are paying money into the pockets of the shareholders. But in the Takaful, when you pay premium, that is why it is called contribution, because it is the operator manages the fund because you are a participant. So the fund is owned by the participants, not the shareholders. That is why it is called, the risk fund is owned by the participants. Then the management of the company, of course, for conventional, it's a company by management, but the Takaful is called a Takaful operator because it is a fund manager, so it manages the funds and operates from underwriting and designing of the products. Then the form of contract, of course, we have said the risk buying is contract of sale for conventional, but for Takaful is Sharia contract. It is a cooperative, you know, contract. Then the investment for conventional insurance, it is not restricted. It is interest-based, but for Takaful is non-interest Sharia compliant. It is restricted. There's no way a Takaful operator can invest its assets, its money or fund into a non-Sharia compliant, because one of the basic risk for Takaful operators. Of course, for surplus sharing, shareholders share surplus, but for Takaful is the participants that share the surplus, and the operator also gets reward for it. So the Takaful products, there are so many products. Just like the conventional insurance, there is family, that is life insurance, and general non-life insurance. At the beginning, when when Takaful came into being, the family, which is the life insurance product, was slower because many people, especially the Muslims, don't think that life can be short. But with proper explanation and awareness and education, we came to the realization that if you are doing life insurance, you are not insuring your life. It's just a family investment. That is why the name family is adopted under Takaful. You can see that family and life in bracket. So examples, we have education Takaful plan, we have mortgage Takaful plan, savings. I just, you know, there are so many. I just brought the example just for us to see. Then for general, of course, general Takaful, we have motor Takaful, marine Takaful, travel Takaful, property Takaful, and host of other old, you know, especially the products that are the generic products for conventional insurance are equally sold under Takaful. So the journey of Takaful, quickly, from 2016 to date, NICOM has licensed 5 full-fledged Takaful operators and granted 1 AIP to Takaful operator. That is approved in principle. So you can see we have from 2016 to date, there is Nur Takaful, Jais Takaful, Salam Takaful. Nur is headquartered in Lagos. Jais is in Abuja. Salam Takaful is headquartered in Kano. Hilal, formerly Cornerstone, is in Lagos also. Then Crown Takaful, which is the newest Takaful company, is also based in Abuja. Then Al Wafa, that is the recently, NICOM recently gave Al Wafa approval in principle. So these are the registered Takaful companies we have at present in Nigeria. But before that, before 2013, of course, there are some, window operators. The African Alliance Insurance PLC, Niger Insurance PLC, and of course, Cornerstone PLC were offering, Takaful products where I think since 2007 or 2008. So then but there are no more. With the coming of full-fledged Takaful insurance companies, these companies are no more offering Takaful products. So the market experience, of course, the entry of Takaful operators into the Nigerian market is licensed and authorized by NICOM, as I have said earlier. NICOM has approved more than 100 Takaful products, both family and general. They are available in the Nigerian insurance market. And looking at the global trend, the Takaful growth is expected to rise. There used to be an annual Takaful report. The IFSB Malaysia also used to roll out its Takaful report. And from what we have seen, approximately $30 billion is the contribution of Takaful and it is expected to rise to like 33 billion in 2024. Nigeria Takaful market, last year in 2023, the entire conventional market has a market share of 1 trillion premium generation. Of that 1 trillion, 9 billion, which is representing 0.9% of the insurance industry, is the market share for Takaful. So that's 2023. Then it's also very, very important for Takaful consumers to know whether Takaful companies are paying claim or not, because the main objective of establishing an insurance company or Takaful company is to pay claims. Without paying claims, then we're not talking about insurance again. It may be something else. Alhamdulillah, 1.8 billion reported claims in 2023, and 1.4 billion, representing 78% of the claims in 2023 is fully paid. And even the ones that are remaining, they are reported because, we are in 2024. So a claim, the insurance operators will tell you that it has to reach 31st December before the claim of a year, expires. So we are hopeful that this thing is going to be paid in the next report. So we have, in 2023 alone, 2 Takaful companies paid a surplus of 450 million. Only 2 Takaful companies, that is going by their 2021 financial year. So we can see that this surplus payment is something that is unprecedented in the insurance industry. Yes, there are some, other things that happen, but this surplus payment, it has never happened before. And Takaful companies have started paying surplus since. So I think this is the 3rd or 4th year in a row where NICOM has approved the payment of surplus. But the one you are seeing on the screen here, 450 million, was only shared in 2023. And 800 million of the 2021 Takaful statutory deposits kept in CBN was invested in FGN 10-year Ijara Sukuk maturing in 2031. So this is only for 4 Takaful companies. Each Takaful company having 200 million, and 800 million was invested. And the corporate rate, of course, this is not my area. Moshood is going to speak more on it. Is 12.80%, and they have started receiving their, half-yearly payments since. Takaful funds, we can see, are contributing towards critical public infrastructure, and also the Takaful companies are, building reserves for going concern. So as they distribute surplus, they have some portion of the money that goes for their reserves. Of course, supervisors will tell you that the reserves are divided into several categories. There are technical reserves and there are statutory reserves. So it's good for the Takaful operators to have reserve. And we're talking about consumer protection because claims and consumers This is the main aim why we have insurance companies or we have takaful companies. So NICOM is not only registering takaful companies, but it is regulating takaful companies, and they are well regulated. NICOM has issued guidelines in 2013 for setting minimum standard to ensure fairness and protect takaful participants. Not only that, there is a market conduct and business practice guidelines for takaful operators. And there is also ERM framework for takaful operators, and there is also a guidance note on micro takaful operation. These are all guidelines coming out from the regulator to ensure that there is fairness in the practice of takaful, and that participants should know very well that it is not a business that is not regulated. So among the options to cater for consumer protection in the takaful documentation, NICOM has allowed the option of ADR, which is a recent development has shown that in the area of consumer protection, there is need for ADR in order to reduce, the burden of going to courts or dealing with going through courts for unsettled claims. Apart from the fact that NICOM has an internal consumer protection unit, there is also room for ADR in the documentation of the takaful products for consumers to be comfortable. And these are documents that are given to consumers even before paying for their premium. They need to go through it and understand what happens if there is, at the end of the day, if there are issues that need to be addressed, or there is no satisfaction, or there is conflict, and other issues that may come. Then I'm sure the regulator is looking at the possibility of in the future of appointing panel of neutrals to meet consumer satisfaction. These are some of the measures taken by the regulator to ensure that customers are protected, consumers are comfortable with the registered takaful operators. So in the area of the future prospects of takaful, we know very well that globally there is influence of Islamic finance, and awareness is really, really rising. For takaful, since 2005, there was this joint working group from the Islamic Financial Service Board Malaysia with IIS. IIS is stability of takaful, and also the growing rising awareness of Islamic finance has no bounds for now. Then people are understanding the concept of economic justice and shared responsibility. It is also positive for takaful. As we have shown earlier, the global annual growth for takaful is over 12%, and it is growing. So, and financial inclusion has also raised international collaboration and government support. We have seen how last year UNDP entered into Global Takaful Alliance under its Insurance at Risk Finance Facility to cater for the at-risk communities. We're talking about, global issues here. If UNDP has entered into such a collaboration for takaful, then it is a very good indication that there is a rise in the level of awareness and also inclusion. Then the expansion of takaful offerings in non-Muslim markets. Today, as we speak, we have insurance companies that are offering takaful products in the UK and US. Of course, the United States, because of their different laws from their states, there are only few takaful companies, but there are so many financial service providers that are offering takaful products. Then takaful is also, in the future, we believe is going to attract perpetual scope to aid the practice of takaful annuity. Because, there is annuity in the conventional insurance. There should be annuity in takaful too. But perpetual scope is going to aid the development of annuity. And we hope to see this in the near future. I think this is a task for Moshood and all the other people, especially our sister Hajara Diola in Lotus Finance, because this is their area. This will aid the development of Takaful very well. And of course, we are in the 21st century. We are using fintech, and fintech gave rise to insurtech, and insurtech now is giving rise to Takatech for digitization and inclusion. Today in Nigeria too, there is an ETAP, Takaful app, mobile app, which is also is a one-stop shop for Takaful business. So I believe we are going to see more in the future because of digitization, and also even the regulators, they are moving into the era of regulatory technology. So it's not something that we should say that we are going to leave behind. And another positive for the future development of Takaful is also the institutionalization of ADR in Islamic finance. So this thing is going to help in making customers or insurance consumers, if you like it, to have some level of comfort in venturing into Takaful as participants. This is a very good indication of future prospect for Takaful and Islamic finance. So
5 minutes more, sir.
I believe this. Hello?
5 minutes more, sir.
Okay, I'm done. In conclusion, I always like to end my conversation with a quotation. And I find this quotation very, very apt for this program, especially talking about Takaful, because it says conventional finance is primarily a risk-shifting model, while Islamic finance is a risk-sharing model. This particular quotation is specifically, to me, talking about Takaful. If you remember in slides where we brought the comparisons between conventional insurance and Takaful, you will see clearly that it appears in so many places where that there is a risk-sharing aspect in Takaful, whereas in the conventional insurance, it is a risk transfer. You go and transfer your risk to an insurance company and you go and sleep. While even though in Takaful you are sharing in the risk, you have the operator to manage the fund for you. And it is supported by Sharia. So this is my conclusion. I believe the last few minutes I was able to convey, the message that is intended for this program. I thank you very much for giving me the opportunity to speak, and looking forward to future collaboration with NIFIAN, and looking forward for the development of Islamic finance in Nigeria. Thank you very much.
Thank you very much, Malam Ahmad Kollere, for the wonderful, precise, and straight to the point presentation. Just like the Quran verses, "Wala yunabbi'uka mithla khabir," and none can enlighten you except the enlightened one. And for the benefit of audience just joining us, Malam Ahmad Kollere has taken us through the Islamic finance and its objective. Then he zeroed in into Takaful, which is an aspect of Islamic finance. Then he compared and contrasted between, or let's say comparison between Takaful and the conventional insurance, their structure, their benefits. Then he then further dwelt on the Takaful products, explaining to us some of the misconceptions about the Takaful life and how it has become family life Takaful just for acceptability within the Nigerian market. Then it told us about the market experience when it comes to Takaful. Then he also spoke about the Takaful consumer protection and the future prospects for Takaful. And he ended it up by telling conventional finance is primarily a risk-shifting model, while Islamic finance is essentially a risk-sharing model. Jazakumullahu khairan for this wonderful presentation, concise and precise. For questions and contributions, would suspend this while we proceed straight into the next presentation, which is going to be taken by Mr. Moshood Babatunde. By way of introduction, Mr. Moshood Babatunde is currently the Group Finance Director for Lotus Capital Limited. He has been in the industry for almost 2 decades now, straddling the financial and business management, financial sector, capital markets. He has his specialty includes corporate strategy, financial advisory, investment portfolio management, treasury management, business restructuring, audit, tax management, finance performance measurement, enterprise risk management, among others. At Lotus, is responsible for the overall medium to long-term corporate, business, and financial strategies. He has successfully developed CA and he holds MBA with a specialization in management. He is also Lagos and University of Lagos, that's ILAG. So I present Moshood, who will inshallah be taking on the second non-interest finance value proposition for customer experience through product offerings. Interesting. Let me leave it at that. That's why I allow for your own.
Thank you, Tesleem, for this wonderful introduction, and I must sincerely thank NIFIAN for organizing this webinar, because this is the only platform through which we can actually deepen these markets and expand the industry beyond where it currently is. Is a very good topic, speaking about the non-interest finance and how do we leverage the value proposition of non-interest finance, most especially to enhance customers' experience through product offerings. I will be speaking from the perspective of non-interest bank. Madam Kollere has spoken a lot on the technical aspect of Islamic finance. And I believe that if we put everything in this basket of Islamic finance, we will see how beautiful this innovative product has helped the entire economy, the human, and everybody in developing from one perspective to another. Speaking to the topic, we'll be looking at the value proposition of non-interest banking. We'll also be looking at the objective of a banking product offering towards customer satisfaction. Contemporary issues affecting customer satisfaction in non-interest banking, regulatory framework, and interventions on consumer protection in the banking industry. We'll also be discussing common customer complaint and regulators' expectation. And we'll be rounding up the discussion with what is ahead, towards better customer experience. If you look at this outline, everything is speaking about how Islamic banking and Islamic finance generally is redefining the customer experience, because it is important if you look at where we are coming from and where we are now, we will see how Islamic bank or Islamic finance has really changed the narratives of finance generally. In the recent time, and these are the statistics that are available in the public space, Nigeria has ranked as one of the five countries that have recorded biggest yearly rise in Islamic finance. This underpins the importance of the Islamic finance in the society and in the economy. And if we also look at the asset size of a non-interest bank, in the as at 2021, based on the CBN data that was available was about 500. Today, it has grown to almost 600 billion naira. We're also looking at the Nigerian market. 42% of the Islamic finance is Islamic banking assets in the Islamic banking sector. If we check how it started, it all started as how do we change the way we do things in the conventional ways? The very first bank that came as an Islamic bank was a Jais, even though before that time, we had some banks that are offering Islamic products, but there was no regulation, there was no structure, there was nothing to guide how they navigate the business. But today, we can say that we have 5 full-fledged non-interest banks. We have 4 Takaful companies, we have 14 Sharia compliant fund under management, and we have Sukuk that is almost over 1 trillion. When we had both sovereign Sukuk, which was issued by Nigerian federal government of Nigeria, and other Sukuk that are currently listed either on the FMDQ or NGFs. Like I said earlier, now we have almost 5. We have 5 banks that are operating. Lotus Bank, we have Touch Bank, we have Central, also have Alternative Bank. Combined together, they hold almost 10% of the industry in the banking industry. 90% of the industry are still held by conventional bank. But honestly, if we are to look at the growth and how it has evolved, it is still a reasonable and remarkable growth within the space. In the last, I think Jais started around 2003. Between 2003 and 2024, we are in now. That's about 20 years or there, about 21. But this is the current reality. And if you look at the customer experience in banking industry, this graph on the left side was a result of the survey conducted by KPMG in 2023. And it's focused on the customer's experience in the banking industry. This is banking industry generally. And it's tried to explain how customers choose between one bank and others. What determine what influences the choice of the customer, the customer in choosing one bank over the other. Why is it important? It is important because we just mentioned that within 20 years, we just recorded 5 full-fledged banks in Nigeria. And when we look at it in the scope of Africa, Nigeria is still the one of, most especially in West Africa, is still the largest market for Islamic bank in Nigeria. But we could also argue that 5 could have maybe increased, and maybe 10% could have also increased in terms of a market share. But there should be some factors that are influencing the growth and also limiting the growth. And these are the focus of KPMG in 2023, because we need to also do a reality check that why are some customers are choosing Islamic bank or Islamic finance products over the conventional, or why are people not also going for Islamic finance products. It's all about how the customer perceive the product. What are the knowledge that they have? What is ease of also even choosing the product? What is the experience, the total experience of doing business with Islamic bank? If we check, I think for corporate clients in 2023, they are the highest rank clients that feel barely satisfied, 79%. Others rank behind them. Well, it's not a surprise because even if you look at the Nigerian as a whole, the customers service index is ranked around 62%. So we will be looking at how can non-interest bank leverage on special value proposition that non-interest has over the conventional. And that is the reason why most of the non-interest banks are looking at how do we redefine this industry? How do we redefine the customer's experience? How do we expand the market such that there will be value? The customers will see the value in choosing non-interest products over the conventional. And what are the objectives? What are the objectives of the banks, the non-interest banks that we have spoken to? What is driving this expansion in the industry? Is the need to provide Sharia compliant financial solutions to most of the customers that will prefer to go and that will prefer to choose this type of products, either because of their faith or because of their preference that is personal to them. But you also agree with me that in Nigeria, even though we have over 50% of Muslims, it's not also it's not balanced. Even if 50% of the people of Nigerian population are Muslims, we also see other customers that are also looking for these products. In addition to Sharia compliant financial solutions, they are also looking at how do we offer our clients an experience that is based on the profit sharing, not just, okay, I'm giving you this particular cash in exchange for this cash. And that will be in a very clear, fair, and transparent manner. So these are other considerations why non-interest is also thriving. And then the other objective is that the non-interest banking is looking at the customer's interest through asset-backed or asset-based investment. Unlike a conventional, non-interest does not just invest in any asset or does not conduct the transaction. They have to conduct the transaction, and there must be an underlying asset that is backing that transaction, or from which the transaction is also derived. And they promote partnership and trust. I think that is the key word in the non-interest banking. The non-interest bank see the customers as the partners. So we are doing the business together. We are interested in your own financial interest. So we need to do this thing together. So that is the objective. And how are the non-interest banks are going about this? Generally, banking all over the world is about on the right side mobilizing the funds, on the left side also using the funds to generate or to finance some transactions, some instruments, and to develop. But the niche in the Islamic finance is that when you are mobilizing funds, there are criteria through which those funds are done, and it's not just I give you the money, I'll give you the interest. From the fund mobilization, we are looking at savings account, which most of the time is usually called. Called is a benevolent loan that you are giving to the bank to say, okay, use it or keep it for me. If there is any profit in it, the bank gives, but there is no obligation whatsoever. But the bank has that fiduciary responsibility to make sure the fund is utilized in a way to generate profit, and if the profit is shared. Current account is also there. Investment is done in a moderate manner. In Nigeria, currently is moderate investment structure services are also there, domiciliary account and the rest. But that is not the focus here. On the other side, we also have lease transaction, which is known as Ijara. Lease is popular in the conventional world, but in the way that non-interest is structured in non-interest is called Ijara. The bank own the asset and is leased to the people that need their service or the asset. The trade is also conducted in a cost plus, which is Murabaha structure. The bank buys the commodity, the asset, and sell to the customers. Equity-based financing is also another option that the financial institution, non-interest financial institution, bank, uses to finance most of the project, the transactions in equity-based manner. The investors put down the money, the bank manages the money, and in a professional way to invest it in a project. The profit is there. The profit is agreed in an agreed sharing ratio, and at the end of the day, the profit from the project is shared. Joint venture is also another form of products that the bank uses to finance some of the transactions. In this case, profits and the loss sharing ratio is agreed. Salam is common in the agricultural produce. Istisna is common in the construction-related project. Sukuk is the most popular financial instrument in Nigeria today that has over 1 trillion naira in issuance. These are the products that non-interest bank uses to deliver more value to the customer. And what are the value that non-interest banking are delivering? Sharia compliant, we've spoken about this, and most of people here, audience, have a fair idea of what it's all about. There shouldn't be any interest. There shouldn't be the transaction should not have investment in something that is forbidden, prohibited, pork, alcohol, and etc. There shouldn't be uncertainties. There shouldn't be any excessive risk. That's girl, and there shouldn't be speculation and gambling. Another value proposition that all these products also offer the customer is transparency in the way it is conducted. We agree in the particular profit and profit sharing ratio in case of a Monjaraba or in Musharaka. Profit and loss sharing ratio is known, is transparent to everybody, and is conducted in the same manner. So if at the end of the day you say, oh, we have made a particular amount of money, we share it in an agreed sharing ratio. So that transparency gives a lot of comfort to the customers that have experienced both sides. And you will see that many people will choose non-interest over the alternative that are in the market. There is a certainty on terms of engagement. There is no hidden charges or compounding of interest. There are a lot of innovation and financial inclusion. And this is another value proposition that non-interest has also offered, redimension the way the financial solution is actually done in Nigeria. Before 2012, there was no sukuk in the market. Many people that wanted to invest in fixed income instruments that are not interest bearing, they didn't have that opportunity. In 2013, State of Osun issued sukuk of about 11 billion, and that gave opportunity to people to invest. Fast forward to 2017, federal government came to the market to also issue sukuk, 100 billion. And then the federal government has issued about 6 series of this. Lagos State has issued, Gombe has issued. These are the innovation that the non-interest has also offered for financial inclusion. And I mean, investing responsibly and sustainability. Today, when you look around, you see this portion of the road is funded by sukuk. These are the opportunities that Islamic, the non-interest product has offered There is no state that you will go today that you not see a part of federal government road that is funded by Sukuk. And this is coming through this innovation that we have been talking about. But what's this Sukuk all about, funded by Sukuk? He is saying that you, me, the banks, everybody that has put the money together has pulled out resources to fund that portion of the road. You could see it's also another way to impact on the investment and the economic development. I will also talk about this. Where does non-interest bank rank in customer experience in Nigeria? Honestly, we're still far behind. You remember I spoke about the KPMG. Yes, the KPMG survey, which shows how the customer experience rank in Nigeria. I think the major problem that, because if we look at on my left side here, you will see that we see have conventional, Stanbic, and City. They are the ones that rank. But the issue is not about the brand. It's not about the trust. It's not about whether the customer does not really believe in the product. But the issue is on the customer service experience, is a transaction journey, is the ease of also doing this business, is a customer service generally. And if you look at the contemporary issues affecting this customer satisfaction, competitiveness of investment, profit, customer, in addition to looking for the investment that align with their fee, they're also looking for the risk-adjusted returns. They are benchmarking what are the returns that non-interest is offering with the conventional. And you can agree with me that it has improved. If we compare before the issuance of Sukuk, the expansion of the hinder, you cannot say that the competition, non-interest bank has that space for competition. Speed of service delivery is also key contemporary issues. The documentation, non-interest product is governed by the documentation, is governed by the structure. So speed of service delivery is also a contemporary issue. Limited product knowledge, the pool of professionals that understand the product, that will be able to explain the product to the customers in a way, in a layman language that they will understand. I think this is also an issue that customer satisfaction. Disadvantaged competitive environment. We have Sukuk, which has created a parallel environment for competition, but there is no short-term Sukuk. Anytime that there is a shock in the macroeconomics, the conventional can quickly adapt and also respond. But most of these are not readily available. And we are talking about this. These are the contemporary issues that affect the bank. There's no treasury. We have treasury bill today. There's no Sharia compliant treasury bill. And when to increase the level of experience, the customer experience, how customer feel in choosing those products over others. I also want to talk about the recent regulatory framework and intervention, which also see to this customer's experience. And that in recent time, CBN came, specifically in February, came with a revised consumer protection regulation. It was issued in 2016 originally, and I think the review was initiated in 2019. And why is CBN getting interested in this? You will also recall that in recent time, there have been a surge in the way the banking business is conducted. And that is most of the services, most of these products are now available on the digital platform, and the interactions are also enabled on the digital platform. This is to protect the customers and to protect the data and the assets of the customers, to also ensure that there is transparency in the ways and manner the bank conducts this business. most of the objective, I mean, these are the objective: transparency and the disclosure, the protection of
5 minutes more.
consumer on the ethical and the predatory practices, ensuring the consumers have control over the personal information, and ensuring compliant redress mechanism. I think in terms of how the non-interest bank generally have done, they've really done well. Fair treatment and responsible business conduct. There might be a room for improvement, but we've spoken about the ethical way of doing the business, the fair treatment, profit and loss sharing. This is embedded in the fair treatment and the responsible business conduct. Disclosure and transparency, we've spoken about that. Protection of a consumer asset and privacy. This is where I think, in my own opinion, that the non-interest bank, we have to invest more for most especially in the area of digitization, in the area of technology, in the area of improving the customer experience and the ease of also doing. Why can't the deployment of the like of blockchain or artificial intelligence in the documentation of Sukuk or in the documentation of the transaction document? I think this will also enhance the customer experience. Financial literacy, this is one of the things that we are doing here. And central bank is trying to ensure that it's not just leaving it that, okay, do it, but ensure that there are regulations that is governing this. And the complaints resolution. What are the expectations of the CBN? These are the expectations of the CBN. We bankers in the house, we know that we must provide access to free and efficient complaint resolution mechanism. Today, complaints are even done on social media, and we can see how the banks are responding. Policies and processes must be in place, and the responsibility of who is responsible for resolution. Engagement with the clients should be at top notch. I mean, there are a lot of code and requirements on this. Escalation, CBN has also encoded that there must be room for escalation and the reporting. In case if you are unable to deploy your internal mechanism to resolve the complaint and to improve the customer experience, then there must be escalation. There must be opportunity for second level review. And if all these are exhausted and you are still unable to, then customer are right to escalate to CBN. All this improve on the customer experience. So where do we go from here? In non-interest bank has moved from one bank, Jais Bank, in 2003 to 5 bank in 2024. Where are we going to be in 2034? I think this is where we also need to also make some decisions and make some investment in improving the way we will conduct this business. Investment in technology is important. We need to embrace digital transformation that will enhance the way we conduct the business. We've spoken about digitization of some of the documentation. We've spoken about ease of also getting through to us. And I think that is the core. Capacity development is important. NIFIAN is organizing a lot of programs. There's nothing bad if NIFIAN can also lead the establishment of an academy for Islamic finance to also increase the pool of the professionals that we have, so that the capacity building will be continuous, innovation will be continuous, research and development to drive the product innovation will also continue. And these will have the pool of the people that will be able to sit down and think, oh, how do we even structure this short-term treasury? How do we do this? How do we do that? I think this is important. And this is a platform that we can also raise in NIFIAN and can take the lead. Continuous stakeholder engagement. This has happened in recent time, and that is what led to so many rules, so many guidelines. Today, we have from 6 in the PENCOM is as a result of engagement. Today, we have different regulations that are driving this non-interest. I think we have to continue. The awareness must continue. The collaboration of all non-interest finance must continue so that at the end of the day, when we are looking at a year, 2 years, and that we will be able to have moved from 10% to 30%, 35, 40%, and move from 5 non-interest bank through the product structuring, through the innovative financial solutions to increase the number of non-interest bank that we have in Nigeria. And this is the point at which I'm stopping. I hope that I'm able to deliver this presentation within that ample time of 30 minutes. Thank you.
Thank you very much, Mr. Moshood. Thank you very much. The audience will all agree with me that you have packed a lot within the 30 minutes allotted time. And in fact, you also added 1 more minute just to ensure that it is very well packed. Thank you very much. Just by way of recapping, Mr. Moshood has taken us through value propositions of non-interest banking. He has also spoken about the objectives of banking product offering towards customer satisfaction. He talked about, thirdly, he talked about contemporary issues affecting customer satisfaction in non-interest banking, that is the non-Islamic banking. That was the Nigerian register for Islamic banking. Then he talked about regulatory frameworks and interventions on consumer protection in banking industry. He talked about common customer complaints and regulators' expectation. And lastly, he's looking towards a better customer experience, which include, among others, the fact that NIFIAN might need to also lead some initiatives, such as creating academy for Islamic finance practitioners, so that this set of resource and these capacities or this personnel can better resource the Nigerian Islamic finance landscape. Thank you very much, Mr. Moshood, for the so much you have packed within the 30 minutes that we can continue to unpack and to unpack and to unpack. Jazakallahu khairan for this. I haven't run through the 2 presentations from 2. You will agree with me that there are 2 illustrious speakers, as I have indicated earlier. So we want to leave the remaining 12 minutes for questions and clarifications. I can see some comments on the chat box. So attendees should feel free to drop their questions on the chat box, and 1 or 2 persons might signify to verbally ask their questions within the window of within the next 10 minutes. From one of the a message in the chat box reads, "Thank you so much for this wonderful presentation. May Allah reward you abundantly. Please, how can we get soft copy of these 2 presentations?" That's from Mohammed Secretariat. Might want to address this. You can always reach out to the NIFIAN Secretariat. I know the admin sec is on board, and I'm very hopeful that they will be able to provide response on these questions. We have the floor for questions, clarifications, and contributions. Okay, so for the individual requesting for the presentations, there is a response that you might wish to drop your email in the chat box so that it can be actioned. So we have the window for questions and clarifications where required as it relates to the 2 borders on Takaful and the second borders on banking. Let me just try to do a more comprehensive a more comprehensive recap of was done by Malam Ahmad Kollere, who is the current head licensing and regulation intermediations of the Nigeria Insurance Commission, that is NICOM. And he addressed the topic, leveraging non-interest finance value proposition for customer experience through product offerings from the takaful perspectives. And we looked at the takaful as an aspect of non-interest finance. So when we talk about non-interest finance in Nigeria, we are talking about Islamic finance in Nigeria. Then under that, he addressed subtopics or sub-issues such as takaful as an aspect of Islamic finance, the value of Sharia compliance takaful over the conventional insurance offerings. Then he also looked at the objectives of the Sharia, which is the maqasid of Sharia in takaful product offerings towards customer satisfaction. Then he looked at the contemporary issues affecting customer satisfaction in takaful products and services offerings. And he capped it up by telling us about towards a better customer experience, and leaving us with a particular saying that goes thus: conventional finance is primarily a risk-shifting model, while Islamic finance is risk-shifting model, while Islamic finance is a risk-sharing model. And the second presenter addressed the topic, leveraging non-interest finance value proposition for customer experience through product offerings, the non-interest banking perspective. And the topics and the objectives of banking product offering towards customer satisfaction, then contemporary issues affecting customer satisfaction in non-interest banking, then the regulatory frameworks and interventions on customer protection in banking industry, then the common customer complaints, and then the regulators' expectations from Islamic banks, talking about the 4 full-fledged Islamic banks and the loan window, that's Jaiz Bank LC, Taj Bank Limited, Lotus Bank Limited, and the Alternative Bank Limited on the one hand, and then the Sun Trust non-interest banking window on the other hand. Then I also talked about towards customer experience. There's a question here that says, do we know why initial conventional insurance that had windows stopped and didn't proceed and didn't proceed to become full takaful operators? So wondering what could be learned from there. So I think this question is directed to the first presenter, that is Malam Ahmad Kollere. So the questioner is asking that the question specifically is that from your presentations, you did mention that the initial convention.
Thank you.
Oh, okay.
Yes, he said why the operators didn't continue, right? Was that not the question? So Alhamdulillah, in my presentation, I said before 2013, when NICOM issued the takaful guidelines, we had 3 window operators: Africa Alliance, Niger Insurance, and Cornerstone. And with the coming of the takaful guideline in 2013, we gave them the opportunity to migrate into a full-fledged insurance company, that is takaful company. And you can see very well that today we have Hilal Takaful, which is Cornerstone Takaful. So Cornerstone has migrated into a full-fledged takaful company. As for Africa Alliance and the Niger Insurance, the time we gave them, they did not migrate because some of the issues they have even with their conventional business. So the regulator has given them opportunity to migrate, and thankfully you can see that Cornerstone has migrated into a full-fledged takaful company. I hope that answered the question.
Okay, apologies. So one more question.
Okay.
The question I asked, how can we leverage on short-term securities in managing the liquidity and response to changes in macroeconomic indicators, especially inflation and MPR Murabaha remains the most used contract within the NIFIs. So the question, I think this question is directed to the second presenter, that's Mr. Moshood. So the question is asking, how can we leverage on short-term securities in managing inflation and MPR if Murabaha, which is a sale-based contract, remains the most used contract within the NIFI? That's the non-interest financial institutions, as Islamic banks in Nigeria.
Okay. Yeah, very quickly, I will respond to that. And I think I addressed it when I was making that presentation. Today, as at today, it remains one of the challenges that macroeconomic environment presents to non-interest. And why is it so? Because today, you will recall that before we didn't have Sukuk. I think we started having Sukuk on the market starting from 2017. And these are 7 years, 10 years. I think the shorter one is 7 years, which is maturing this year. But they are long dated. Today, we do not have short-term instruments, most especially the way conventional has like treasury bill of 60 days, 90 days, we don't have. But the reality is that the engagement is ongoing with DMO, with the CBN, to see how a similar instrument can be created, such that it can create a level playground for non-interest financial institution. But it's an engagement that is ongoing. And until that is done, we may not be able to have that bigger market to address this issue. Sometimes I think 2 years ago, there was a technical committee in NIFIAN that was constituted by NIFIAN. I think some of us here are part of that. And that was what led to Inter-Financial Institution Mundaraba. And I think there is also a Wakala agreement at that time that was approved by all the heads of the banks and Sharia advisors of non-banks. I was also, I think, approved by Trace at the same time. So these are the windows that are still available for non-financial, non-interest financial institutions to have short-term arrangement among themselves. So in case if you have a pool that you can actually accommodate surplus funds, whereby other institution has surplus fund. So there could be some Mudaraba arrangement or Wakala arrangement for short-term period for this. But this is still limited. What is the size of the market? What's the size of the industry? It's still limited with how many people, how many institutions do we have? Bank 5? It's a company. What is their size? It's still limited. But we are hoping that there will be similar issuances for short-term financial instruments, for either from the DMO or from the CBN. And I believe when that happens, it can only expand the industry more.
Okay, thank you very much, Mr. Moshood. Precise response to the question. I'm afraid a question is just coming in now, but I'm afraid we are out of time. We are out of time already. Inshallah, more, including the penultimate question and the last question. So the last questions might be directed to the NIFIAN Secretariat, maybe for their responses. I'm afraid we have limited time for this session, and we are due to round it up in the next 4 minutes. Proceeding from that, inshallah, I'll be calling on the Vice President of the Non-Interest Financial Institutions Association of Nigeria, Dr. Basheer Oshodi, the CEO, Trust Atom, to give us the closing remarks.
Okay, thank you very much. Thank you everyone for being here today. Yeah, I mean, it was a lovely lecture. We looked at areas around risk. We had the Sharia board meeting quite recently, and there's an argument between or around risk and fatwa on risk and penalty, cost of funds and penalty. Now, how do you find a balance or strike a balance between some of these realities, right? How do you find a balance between market risk and, of course, the sale contracts that somebody mentioned, Muraba, Salam and Cisna, right? When the shocks of market comes in, how do you escape it, right? What role will takaful industry play in sukuk? Private school can go bad, and they can. They are going bad. They could go bad. What role, even though yes, takaful is not a part of the capital market structure, but what role can they play, to then expand their scope, right? To give better confidence to the market, right? So while we're expanding the market aggressively, right? How do we? Yes, we like to share risk, right? We also want to pass risk around, in the same vein, right? So on the one hand, Islamic finance can allow sharing of risk and, of course, transferring of risk. We balance the two as much as possible. So as a market, what are the other things we're going to do? How do we use fintech? I know my brother should talk about it. How are we going to aggressively use the fintech structure, to grow? You see a lot of the fintech companies, growing, if you like, at a faster rate than non-interest financial institutions today, right? And the last 5 years, they've grown so aggressively on the back of platforms, right? How do you use platforms to grow our market, right? Yes, still issues around liquidity management instruments, the short-term ones. Because even the long-term ones, it's difficult to exit, for corporate and private sukuk, maybe not listed on time. There could be issues there for the federal government one. Yes, it's listed, but you want to exit on time. There's still issues around mark-to-market, which is a normal thing for all bonds generally. So in the middle of all of these issues, challenges, how do we then still grow aggressively? On the regulatory part, it's been fantastic in Nigeria. It's one of the best cases that we have around the world. And we have the regulatory infrastructure, right, to build the industry powerfully. So on that note, I must say a very big thank you to everyone for attending this. I think the next one, we're going to look at some other more practical areas in the industry and how to tackle them. And of course, that can also benefit us. On one hand, we look at ways in which we can solve the problems. And on the other hand, we also then look for ways that can help us grow the market as interestingly and as aggressively as possible. On this note, I want to say a very big thank you to everyone for taking out time. 1.5 hours is a lot of time, to join us today. My brother, Ahmad Kollere, my brother, Mr Moshood, of course, our moderator, Dr Tesleem Akosile, for your efforts, your commitment, and for being there for us all the time. To everyone, of course, we appreciate your time. And of course, again, we're going to meet up in a very short while. Thank you very much. Bye-bye.
Okay, thank you very much. So thank you, everyone.
Thank you.
And bye for now.
Thank you. Bye-bye.
Thank you, Brother Oshodi.